do this.
All right.
Whoa.
Thank you, everyone, for coming. We have a great panel here. Before we start, I'll just ask everyone to take like a minute to introduce themselves, and then we can start from there.
Sure.
Yeah. Eric, if you want to start, yeah.
My name's Eric Knight. I'm a senior trader at Jane Street. I've been there for 21 years, since around the origin of the firm. We traditionally have traded TradFi stuff, stocks, bonds, equities, things like that. At the end of 2017, we started the crypto desk, me and a couple other traders, and we've been kind of steadily growing it ever since.
Jonathan?
Hi, my name is Jonathan Chan. I'm the Global Head of Business Development and Partnerships at Wintermute. Wintermute is a crypto-native, high-frequency trading firm that has an OTC desk and trades across decentralized and centralized venues. I just wanted to take a quick second to address something that I mentioned on the previous panel as well. An incident with Wintermute occurred a couple days ago, and I just want to echo on that as well. So what has been made publicly is the fact that this was related to a profanity hack that compromised one of Wintermute's wallets that we used for gas optimization as we traded on chain. I want to be very clear here that this was exclusive to that smart contract, and it did not affect any of our internal trading systems or any centralized venues that we took part in. Wintermute still stands to be in a very strong financial operation and will continue to deliver industry-leading standards across products and services to our partners. That being said, as more information comes about, the CEO will let the community know, and we continue to strive for best practices. Thank you.
Joshua, thank you.
Hey, everyone. My name is Joshua Lim. Sorry, the descriptor is a little vague, investor, but I used to work at Genesis up until about 3 weeks ago. Genesis Trading, which is one of the largest OTC trading and lending shops in crypto. We have a lot of dealings with Wintermute, and obviously it's a tough time for the market for everyone. But we definitely respect them as a counterparty in the ecosystem. But yeah, I've sort of been in crypto for 8 years in various seats. Worked at Circle, worked at Galaxy, and at Genesis, and have some perspective on some of the stuff that has happened in the market in the last 3-4 months with all the turbulence, right. And then even beyond that, just kind of the whole evolution of the institutional space in crypto.
Thank you. Sarah?
Hi, I'm Sarah Brooks, and I'm COO at Connext Network. And Connext is an interoperability bridge. And we're differentiated because we're the only generalized cross-chain interoperability protocol without introducing any additional trust assumptions, which makes us very secure.
Yes, thank you. So I think before we can look forward, we have to look like a little back. So the events of Q2 were clearly very special. We hope that it never happens again. But Sarah, do you think that that affects perhaps the multi-chain thesis going forward? Are people more careful with like bridges? And is that activity going to suffer because of the events of Q2 and the collapse of Terra Luna?
Yeah, I think people are more cautious in general when assets are volatile and there's times of uncertainty. People naturally flee to other more secure assets. We had a bit of a perfect storm earlier this year with the Terra Luna collapse, with 3AC collapse, with war brewing, with inflation. Lots of really cheap capital floating around everywhere. Lots of risky leverage taking place. And so that led to hundreds of billions of dollars fleeing from the crypto markets. And yes, so we definitely saw that on-chain, like the repercussions, a lot less volume, a lot less liquidity, a lot less transactions. And bridges are a part of that. There's been a lot of bridge hacks as well. We do need to help our reputation repair there. Unfortunately, that's happening far too often. I think as the technology gets more sophisticated, though, the bridging is a hugely important infrastructure layer. We live in a multi-chain world now, and we believe that that is going to continue into the future, but it's very siloed. And there's not a lot of ease in moving between them, which is what we're hoping to solve for. And so rather than being a multi-chain world, we want to be a cross-chain world so that people don't have to care about what chain that you're using. You can just do what you need to get done, and you don't have to think about what blockchain you're using or how to get there or what the repercussions may be that it's a really seamless user experience. So we're super bullish on multi-chain and the cross-chain world coming down the road.
Yeah, I think we can all agree that, I mean, inside Messari too, we're all bullish off the long tail of assets. We like to cover as much as we can, and it's not just going to be one or two chains. Perhaps, like Jonathan, now you can speak to how those events affected TradFi coming in. Did they push it back a little? What are your views there?
Yeah, let me circle back there where I guess it was quite unfortunate that these incidences occur to an extent because of what happened in 2021, right? We were building off the euphoria of a massive bull market, and these relatively new companies and new protocols that came to about felt really pressured to effectively give very strong returns that were unsustainable, right? And because of that, I believe that not best practices and not proper risk management metrics were set in place. And it's quite unfortunate, right? But to an extent, it was necessary. There's never been an industry in the history of the world where there hasn't been cycles of successes and failures, and this is just one of them, right? To answer your question with regards to how has that taken into institutional adoption, yes, it's probably taken the time frame a little bit longer now. They've taken a step back because most institutions are quite risk averse, right? They're going to take a look at this and say, hey, we're extremely interested in this space, but it's just not ready right now, which is okay. But again, it takes a lot of these faults, successes, failures to come into place for the industry to mature, and the players that are left into it are really going to be successful and learn from the mistakes from prior.
Absolutely. Phil, do you think this is consistent with what you're seeing as well?
Yeah, I'd say, so just to backtrack, Jane Street has a lot of traditional trading counterparties, and I see a lot of notes with meetings for them, and it used to be everyone's kind of asking, and what about crypto? And what about crypto for all these traditional asset managers, funds that just trade, normally like ETFs or options, things like that. So we did see a little bit less of that. Everyone was kind of asking about it as well. But that being said, I think that there still, at many traditional institutions, there still are people working on it. Again, but take it with a grain of salt. And these things move slow.
Yeah, absolutely. I mean, this volatility is a unique feature of crypto. I mean, there are not too many assets that go down 80, 85% and still come back. So do you see that changing going forward? Joshua, if you can take this.
Yeah, I mean, I think reflexivity is like a key characteristic of crypto, just as an asset class. I think for many reasons, right? Like, crypto is born of this idea of it's, Bitcoin in particular is a monetary asset, and that requires this collective delusion in some sense, that we all believe that it's going to be a store of value, and other people want to buy it from us later in the future. So there is this sort of inherent feedback loop that's part of Bitcoin, and I think that carries through the entire crypto universe, right? You have a lot of assets that are basically accrue value through network effects, right? Things that are, like Ethereum allows you to transfer value to someone else through this sort of decentralized computing platform, and that accrues value by having more and more people participate. So you get these reflexive cycles, and that happens, and I think that's what Jonathan was saying too. Is I think people get very exuberant about the potential of the technology, and prices decouple from fundamentals a lot, and I think that is a natural thing that happens in a lot of asset classes, and it sort of directs where investment should go sometimes in a good way. And I think the good thing about being in the backside of that now is we can really focus on where the utility is in the ecosystem, and focusing on the sectors that make sense and actually create value in the long term. So that's really what we're focused on, myself and my partners, my investment partners, looking at kind of the value in both kind of the seed stage private deal space, but also if you think about it, there's so much risk reward right now in mature layer ones. There's a bunch of base layer assets that are going to continue to exist forever, I think, and it's just a matter of kind of looking forward 5 years and imagining what the world will look like, and it's likely we're all still going to be using Ethereum, right? So that's, yeah.
Yeah, absolutely. I think you brought up that there is like different liquidity and like different ecosystems. Sarah, do you see sort of any like developing trends in on-chain liquidity?
Is this for me?
Yes, that's
okay.
right.
Any trends in on-chain liquidity? Yeah, definitely. One thing that we are seeing a lot of right now is capital efficiency. So rather than needing more capital in the market to do what you need to get done, we're seeing this trend towards like, okay, how do we use the capital that we have in the most efficient manner? So a great example of this would be Uni V3 that just came out. So LPs are able to narrow in the way that exactly what they want to use their money for, their liquidity for, and getting larger returns because of that. And so I think that that trend is going to flow into the cross-chain space as well. But essentially, we're going to be in this bear market likely for the foreseeable future. So rather than like how do we get more and more money, it's how do we use it better.
Yeah, absolutely. And I know, Jonathan, Wintermute is also very active on chain, and that you do, I mean, I don't know if you're liquidity providers. So how is your how are your processes different from off-chain versus on-chain?
Right. So correct. Wintermute is quite active not only on centralized venues but also on decentralized venues as well. Because I guess the ethos of Wintermute is to promote this space, right? We truly believe the technology and what it stands for. To answer your question with regards to how we provide liquidity between the two, we do access the pricing, the liquidity from all the venues that we are integrated with, right? And that's how we get our theoretical price. With regards to that, generally what we do is provide liquidity on centralized exchanges, and then we scan the systems, scan the different venues, and take the opposing trade to maintain market neutrality on, it could be decentralized venues, or it could be a centralized venue, to effectively get some sort of price discovery between all the venues. And that's exactly what I guess participants want, because if you see on exchange A, the price is trading at 10 cents, and then exchange B, or venue B, it's trading at 12 cents, that's not a good user experience. So as one of the larger liquidity providers and market makers in the space, it is our role to put the price back in line and aid in price discovery as well.
Yeah, absolutely. Eric, are you also, I mean, is Jane Street also transacting on-chain? Are you largely still on centralized venues?
Yeah, I'd say we're still largely on centralized venues, but on-chain trading is something that we're doing and expanding. I think while I probably have a bias that, coming from TradFi and CeFi type exchanges, I do think that DeFi is where there's going to be the biggest growth in the next few years. It's kind of like, I think it's kind of obvious, I mean, as more and more things go on chain, as more and more things get tokenized, it just seems like, I think that's where things are moving, and so we're moving in the same direction.
Yeah, that's good to hear. I cover DeFi, so the fact that you are moving on chain, I think that's very good to hear. What would you say the processes would be different? So how would you manage on-chain risk with specifically protocol risk or wallet risk, smart contract risk? How are those processes different? Are you, do you have a team that specializes in understanding these risks?
Sure. Yeah, I mean, we have a security team as well. But I'm from the trading side. I've been a trader at Jane Street my whole career. So just one aspect that I could talk about from that regard is you can treat things similar to the way we treat centralized exchanges. You assign a risk score to it, which can be a little bit hand wavy because sometimes you don't know these unknowables. It's hard to kind of really quantify tail risk. And as positions increase, as you commit more capital to certain venues, you kind of like there's concentration risk as well. So you kind of like internally punitively charge yourself for the larger things are, to kind of not just prevent having massive positions that you generate without kind of maybe thinking about it too much, as well as just to mitigate risk.
Yeah, Joshua, is that like consistent with how it was at Genesis? And
yeah, well, I was just gonna say, I think the beauty of DeFi in a lot of ways is like as a creditor, you have some protections, right, above what you would have lending, let's say, in a centralized market. One is which you can see the collateral that's against your loan on chain, and you can see kind of how much assets are available to support the loan that you just made. And the other big thing is and this is becoming more and more common, is there's like firms that sort of rate the credit profile of your counterparties based on their behavior on chain. And there's obviously like in a centralized lending scenario, you don't actually know necessarily what a balance sheet of your counterparty looks like, and that's kind of the situation that happened with Three Arrows for a lot of dealing desks. And in DeFi, like you have that advantage, right? You can see what's going on. You can see, like, for instance, the wallet that, like the Wintermute wallet, for instance, you can track kind of like all the transactions in and out. So you can see exactly what their behavior is and what their risk taking is, what exposures they have, and that does give you some comfort as a lender.
Yeah, absolutely. I think, I mean, even Messari, we're doing protocol reporting, which helps maybe, TradFi understand the risks that come with different protocols and how, they can bridge it or try to mitigate it. We're coming up on time soon. I want to give like all of you like a minute each on just, this is like something that I ask everyone. Will there be a next bull run, and what will be different about it? Will the institutions come? How is it going to be different? We can start from Sarah first and go around the.
Yeah, I think there will absolutely be another bull market. I'm not quite sure when that will be. I think we're probably a little ways out from that, but it feels like we're back in 2018. We had a huge hype session, markets ramped up, and now we have a liquidity pullback. People, projects are going to get flashed out, and it's a great opportunity for people to like put their heads down, build. This is always when the best technology comes out, is in times of bear markets. And so I'm pretty excited about it. I think that there's a lot that we've learned over the years, and I think that the next big market will be even bigger than the last. If you look at the market swings over the years, that's what always happens. We're in a cycle, and just continues to repeat itself.
Perhaps, Joshua, can you say, was it one large, big macro trade where risk assets all went up? Was that all there was? Or do you believe that there is something more fundamental about how much we grew and where we land?
Yeah, I mean, I think if you compare crypto with other asset classes, like obviously everything was very much liquidity driven, like in the last couple of years. But I think there's actually some fundamental thing, right, about crypto that is changing the way people behave in the real world and how people transact. And like if you think about like all of the revenue that Ethereum generates, which compared to like, for instance, the amount of revenue that like payments companies make, like just traditional payments companies, it's maybe like less than 1%, right? So there's still a lot of secular growth that needs to happen for crypto to become like a mature technology. Yeah, I mean, I would say like, I think to your other question about what's going to happen into the next bull run is, I think more TradFi money will come into crypto, and that means that people are going to bring it into crypto, like traditional valuation models and traditional ways of thinking about like revenue generated, value created, and people will apply things like DCF models and stuff like that to assets, and that's going to be a big change. I mean, that means that the reflexive cycle where sort of like price can deviate a lot from value will probably converge faster, right? Like people will be able to differentiate between like winners and losers more efficiently. So yeah, I think that's the biggest change I would expect.
Yeah, I think that brings you perfectly in, Jonathan. Do you think the institutions will come the next time? We've been saying that for a while.
Yeah, the running joke is the institutions are coming, right? But I guess I could preface this with, this is not financial advice to an extent. I'm quite confident that the next bull run will come. We just don't know when, right? And it won't be like 2021 where it's retail driven. It'll be institutional driven, right? Which makes it multiples larger than what it was before. That being said, what I've noticed is, yes, these cycles have happened, right? And it was necessary, as I mentioned before. But as I've gone on talks with many large asset managers that are finally dipping their toes in this water, right? But they're not there yet. It's more of a headline to an extent. But what's really exciting for me and what I've noticed is the fact that they're preparing. Preparing in the sense where they might be talking to a proper custodian or exploring prime brokers, or to an extent, setting up proper internal operational processes. So when they are ready, the transition to really be exposed into this space, it's seamless, right? So that's what's exciting to me. But to answer your question, for sure, the next wave will be larger. It will be institutional driven, but we don't know when that will be.
Eric, I'll let you close it.
Sure. So yeah, I agree with Jonathan that institutional driven, I think, is what I think going to be the next kind of main driver for the bull run. I think continuing to build the technology is like extremely important. I think if that's not done, then any institutional adoption won't matter if things don't work. But I see that being the main driver. And people always say institutions are coming, but institutions are often they're comprised of customers if they have if they're if they have a large customer base, or they're asset managers. And with regulatory clarity and things like maybe the spot ETF, that's going to get those customers interested to tell their institutions, hey, we want to be involved with this. Or the asset managers say, hey, this is now an investable asset. I should trade it more and get involved more, because to allow people, make it much more easily accessible for people I don't know, put in my grandparents' 401k. There's a ton of investable assets that are just not able to be tapped right now, or it's very difficult to be tapped.
Absolutely. Thanks a lot, everyone. We had a great panel. Thank you to all of you. Thank you.
Thank you.